Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I'm not a financial disclosures, very important. Trading stock and options involve risk. Not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we talk about trading plan, let's talk about current market conditions, see if you guys have any questions. So we have, let's see, we have some macroeconomic data today. And basically the main, in summary, again, durable goods are better than expected. Personal income in line, personal spending higher, PCE came a little bit higher than expected. So again, kind of fits well into a narrative that, you know, there is no signs of recession. People are still spending money, manufacture, you know, still durable goods are higher than expected. And personal spending continue to increase, and PPC, core PC is a little bit higher than expected. How did the market react to this? Let's look at, I think we have some kind of a reversal. So initially, when the data came out, we did have rates go up, right? Significantly go up with the expectation that interest rates are higher for longer, and the Fed will actually potentially raise the interest rates by another 25 basis points in June. And then it did drop, right? And now it's kind of recovering. So for now, not a lot of price action in the bond market, right? If you zoom out, you can clearly see that, you know, 10-year yield continue to go higher, but it's getting to these overbought levels. And same thing with the 2-year yield, approaching overhead resistance around 4.7 or even 5%. So yield is a little bit overdone. Originally did pull back. You can kind of see same thing prices in gold. There were and the gold miners. There were original reaction was up. It's the same thing with silver. Now we have a strong rebound, a strong big rally in silver. And then pull back, and same thing in gold. Right, so you had a rally and then gap up. So right now people are still digesting the news. And in terms of spider, we are back to upper range of where we've been trading, right? We're trading above the previous breakout, the 52-week high, where we looked like a false breakout. We pulled back on fear of debt ceiling. And now with earnings from NVIDIA, Marvell, and the idea of the AI revolution, or that AI will change the world, and this is the next big opportunity in the market, right? People are selling their Bitcoins, and they're buying now AI stocks. So that's the next theme in the market, and so far we are, you know, trading again, retesting year-to-date high. So what to expect next, right? So on one hand, you have very strong price action, very bullish price action in technology, broke through August high on its way to retest actually April high, right? It's basically this point retraced 62% of all the losses from last year. And semiconductors are basically close to 52-week high. And retraced almost 100% of their losses. So that's one theme, right? Artificial intelligence, Marvell, you know, came out, said they're gonna, you know, realize more revenue from AI. Same thing happened with NVIDIA. And on one hand, on the other hand, you have value stocks that continue to deteriorate, whether it's consumer staples or whether it's small cap stocks or oil, commodities. You know, the fear of recession is here, right? Especially that the interest rates are staying higher for longer. So then the question is, how long will, which camp is going to win, right? Because the theme, the bottom line, what you hear, can you guys hear me? I just want to make sure. I see a lot of questions. Usually there are any questions. Andre, Claude, Michelle, Michael, P, Randall, Scott, Legislav, Bravos. Let me know if you guys can hear me and see my screen. Just type in yes if you can hear me. Yeah, I hear you well. All right, thank you, Michael. Okay, so the theme is divergence, right? I don't know how far, let's see, Dow Jones, DIA goes. Let's see, Dow Jones, how far do we go? It does go to 2000, right? So from 99 through 2000, 98 through 2000, Dow Jones went up by 55%, right? And QQQ, 124%, right? So double. So basically the same, this divergence, right, or disparity between value stocks, cyclical stocks, and technology, that's the main theme. The divergence, you have to go back to 2000, right, the internet bubble, to find that kind of divergence. And usually at some point they converge, right? Either value stocks are going to start doing a catch up to technology, right? And value stocks will look like semiconductors, or the reverse. Semiconductors and technology charts will start looking like value stocks, right? The pullback. But this divergence cannot last infinitely. But it can last longer than anybody anticipates, right? So we already are kind of at these extremes, 25-year extreme, because of the AI, and how long it can continue, nobody knows, right? Because if you go back to 2008, not 2008, but 2000, I mean, it did last quite a few, right? It lasted from October of '99 all the way to March of 2000, right? So from October '99 to 2000, well, actually accidentally, QQQ started October, but it could last from October of '99 through March, of next year, right? So usually you can really assume that the same patterns will exist, but you can see that these extremes, can last all the way into March, right? They can last all the way into March. So timing is very difficult in terms of when and who's going to follow, will value follow technology, will technology follow value, and if technology will follow value, does it happen in summer, does it happen in fall, does it happen next year? That's a little bit trickier question, right? So, but as a trader, you do have to, we're trading in the trader's market, right? I mean, yes, technology and semiconductors are outperforming and continue to grind higher, but you can definitely see that that in terms of spiders, it's not months. Let's go back to 1 week. Right, in terms of let's maybe months is a better chart. So each candlestick is 1 month. I mean, you kind of see that, from in 12 months, we're basically at the same level, right? We were significantly lower, but basically it didn't go. If you start investing in June of 22, or if you started investing, in June of 21, market is exactly the way it was, right? But the question is, and it retraced 50%. So the question is, are we going to 478 or are we going to 346, right? Are we gonna, move 50 points higher or 50 points lower, right? So that's the question, right? Are we going this way or are we going that way, right? Those are the two directions as we approach in summer, right? So that's and if you're a trader or an investor, that's a very important question, right? And you have kind of supporting evidence for two, right? For both scenarios, right? For the bull case, it's all about AI, right? That's the bull case right now, and that unemployment is low, right? Unemployment is low. People are still spending. People are still traveling, booking. People. And then the bear argument is that yield is inverted, can't stay forever. Obviously, interest rates are staying as long as the people are employed and they're spending. Inflation is going to stay higher for longer. Rates are going to stay higher for longer. And at some point, right, you're going to see other signs of distress, whether it's a regional bank or whether it's office REITs or the rise of defaults on credit card, retail debt, rise in bankruptcies in small companies will eventually cause two. So is scenario number one, scenario number two. So let's pause for a second and let's see what the answer is. And I encourage you to do this exercise. This is more of a long-term hold, right? You're looking into the end of the year, right? You look at the end of the year, you're trying to figure out, do I continue buying? Do I jump on this, have fear of missing out? Do I jump on this train and buy, NVIDIA, Microsoft, Google, and or Marvel and try to ride this train? Or do I, maybe start hedging my position, right? Or add to my bearish position, right? So very important question. Let's try to answer it. So how many of you, teachers, so how many of you say one or two, right? Well, fade the rally would be two, right? If you think fade the rally is two, or one. We are approaching summer, right? Usually we are approaching kind of this deadline at that ceiling. Looks like Fed is not going to pivot anytime soon. But on the other hand, NVIDIA is up 30%, Marvell up 30%. It does remind you of internet bubble, right? When all of a sudden, because you projected making 5% revenue increase versus 11, you're adding $300 billion to a market cap, and all of a sudden NVIDIA is a trillion dollar company. So okay, one or two. TJ, two. Okay, Andre, Claude, Michelle, Michael, Patrick, Randall, Scott. What do you guys think? I mean, there's always choice three, right? A lot of people say, well, nobody's winning. The bulls have a good argument, the bears have a good argument, and for 2 years we didn't go anywhere. Maybe we'll stay somewhere between 430. Maybe we'll go a little bit higher, 430 to I don't know, 380, right? So March lows, December lows, and 430. And we just stay in this range between 430 and 380 till the end of the year, or throughout the summer, right? So that is a choice, right? 1, 2, and 3. So 3 is a sideways, right? We just kind of, there's no really clarity, which narrative is going to win. 2, 2, 2. Okay, we have 1, 2, 2, 1. Okay. Well, thank you. Finally, Claude, Andre, thank you for participating. So some of you said 2, right? Some of you said 2. 2 is this, right? Was this digit? Some of you said 1, right? We're heading to higher. Some of you said 2. Nobody said 3. I'm going to put down 2. Right? I have been bearish since the October of last year, since December. Obviously, pretty wrong in terms of timing. Right? I thought the pullback is already going to start in some of the indices. It has started. I mean, I was right everywhere except the AI. Right? And it's hard to predict. Because the narrative back in October was completely different, right? People who started investing in the stock market and kind of jumping on the rally, the narrative was China reopening, right? They removed the zero COVID policy. Europe avoided recession and energy crisis, and unemployment is low, right? Germany negative GDP looks like they're in recession. At least that's the consensus, that the Europe is entering recession, already in recession. China is falling, kind of the market is falling kind of back, right? You can see a pretty, significant pullback and break through the year, posted new year-to-date low. So China is not reopening as fast as everybody anticipated. Germany and Europe is entering a recession, right? And dollar continues to trade higher, right? Stronger dollar. So all of this are kind of the opposite of what the soft landing narrative was in December. But now you have this new variable of AI, ChatGPT. Everybody's using ChatGPT, becoming an open source, and now every company in S&P 500 have to define what their AI strategy is, right? And that obviously creates a lot of demand for chips and AI providers, etc. So I did put, so for my my reasoning that we're going lower, that we do fade this rally, right? It's a little bit overdone, overbought. We're back to the year-to-date high. We are approaching that ceiling. I'm not sure if that's going to be the catalyst. Obviously, if they don't sign an agreement, it's going to be a major shock to the market. Everybody anticipates that they will sign an agreement, but I think whether they will or will not sign an agreement, I would not chase this rally. Technology stocks, I think, it did break through this overhead resistance. So if I'm chasing technology, I have a clear stop loss, right? 330, right? So, I can buy and have a stop of 16 points because I think it's going to go to 400, right? Maybe to capture 30 points. So technology, you have a clearly defined stop loss. If technology rolls over and drops below 330, then you would, I would exit the technology. But as long as it's above 50% retracement and continues to go higher, passive list resistance is going to be higher, right? And I don't know when this kind of exuberance will end, right? Does it end next week? Does it end in August? That's hard to tell, but it's a clear, bulls are, technology is definitely a winner. You have a clear breakout, so this breakout will potentially continue on, right, in technology. So these are in very narrow leadership, right? We're talking about, I don't know, 6, 7 companies, not that many companies. Everything else I would short, right? Whether it's regional banks or small cap stocks, they are definitely, I think, going to continue being weak. Any questions? DJ, yes. A lot of people say because they have to issue a lot of, once they sign a deal and they have to sell a lot of treasury to raise the cash, so it will suck up a lot of the cash out of the system, right? And liquidity will dry out. Because right now they're not issuing treasuries, so okay, people have cash and they're buying equities. But once they're going to start issuing treasuries and raising the debt ceiling, then you're going to have potentially some credit issues. We'll see. In terms of the model, so how do we help a Tradespoon? We definitely have different models. So we do have artificial intelligence, right? This idea of learning, training on the data set, right? Using AI frameworks. There's Google, Meta, there are a lot of open source neural networks that, we're not doing language recognition, that's the ChatGPT, but we are doing pattern recognition on and learning on data. So it's in the AI, very similar. For 10 days, it predicted that, for today, 413 support, overhead resistance 420, neutral trend. So model did a good job today. This data was posted yesterday that, on the downside, 413 is your support. On the upside, 420 is overhead resistance. We are at 420. I would not chase the market. That's what the model says. If you zoom out to 6 months, model predicted 405 to be support, 420. I actually did not believe the model. I said we're going to break 404 in May. I was wrong. All right, model was right. Model was spot on. Right, this was data predicted on May 1st. Right, so on May 1st, model came out and said 405 support, 420 overhead resistance. Very accurate. Right, extremely accurate, since we don't have any new spikes in volatility, and for every good news we have a bad news, and that's how it lasted the whole year. Model did a good job predicting 405 is support, 420 overhead resistance, and we're at the end of May. So at this point, again, I would not chase the market, right, for the next couple of months, at least as of right now. I mean, it does say that, in June, we can potentially go higher to 430, right? So the range kind of staying the same, right, until something happens in the market to push the model or to push the market outside of the range. So these models are very accurate. I would look at them. I haven't looked at seasonal chart. I looked at it today, right? And you can actually see also very strong momentum higher. And this is a different neural network model actually, but correlation is 88%. Right? We haven't had that correlation for past 2 years. It was very low correlation to seasonality. Now, this is very high correlation, right? Usually, February is strong, March pulls back, right, based on seasonality. Then April, May extremely strong, and then May, sell in May and go away, to July, right? So seasonality is extremely high right now. Based on the seasonal chart, that would be another model, another argument that you probably want to fade this rally, right? Just because of the seasonality and lack of liquidity when we approach in summer. Another tool that I think more people are using, I didn't realize it, probability calculator. I mean, it's one of our oldest tools, but this is just a basic chart that tells you, based on 2 standard deviation, 1 standard deviation, what you can expect, right? 1 standard deviation, 414 to 424, right? That will be the range where the market is trading in the next, 30 to 50 days. 2 standard deviation, we revisit December lows, right? 350, and potentially a year-to-date high, right? That would be 2 standard deviation move, which is rare, right? To assume that we're going to reach 52-week high, in the next 50 days, it only happens 3% of the time. And then 3 standard deviation, we break through 52-week high, or we break through December lows, that happens, fraction of a percent. But, 70% of the time, we're going to stay somewhere between 414 and 424. Right, and you can hover over and actually see, that the 4 models basically said that prediction is high. So those are some of the tools that we offer that you can always use to kind of help you navigate. If you have an idea, you want to validate it against the models, those are some of the tools we have. If you want to follow the trading, I propose Elite Trading. Right, Elite Trading is where you can enter your phone to get all of our messages. Right, every time I trade, you can go to TradeLog and it'll tell you all of the trades. Right, Marvell. Right, I bought Marvell, hedging my short call. It's up 60 points. So you will see examples where I do option trades and stock trades. And this is an example where I actually, the trade's going against me, so I'm hedging, right? I'm limiting my risk, right? I'm limiting my risk. So again, this is an example of iron counter together with stock, or Broadcom, where I just closed the Broadcom, right? And that was a signal. If you look at our, I think let's see, was it in Weekly Trader? Right, so we have ideas on Weekly Trader. We had MCHP. Okay, so you have an idea, right? Several models, the different signals. So MCHP and or Broadcom, and the models, Active Trader, Weekly Trader will give you support and resistance levels, right? Suggested entry point and exit, but you have to, decide when you want to buy it, right? Elite Circle, I'm using some of these trade ideas to buy, buy the stock. Then you will know exactly when I trade. So these are just idea generation based on the model. These are the models and the tools that we're using. And these are different portfolios, right? So you have Elite Circle, where you can see all of my trades. Robo Investor is only stock trading. Premium, spread, these are only option spreads, right? Daily trading. So these are some of the tools that we have in our disposal. All right, any questions? I know usually we go till 10:45, 10:15 in the next question, but today I do need to leave a little bit earlier. So I want to see if you guys have any questions before, maybe I'll do another couple minutes, just go over different data points. But then I do like to leave in 5 minutes. So do you guys have any questions on where the market is heading, right? What are the key support resistance levels? So I went over the tools. I went over support resistance levels. In terms of next week, let's see. As we approach next week, I think the biggest, ISM manufacturing data, not sure how much effect it's going to have. It is contracting. I don't think we're going to see a lot of changes, but unemployment, right? The soft landing or no landing narrative basically is based on the fact that unemployment rate is low and we have AI revolution, right? Those are the last two legs of the stool that the bulls are sitting on. Kind of everything else, the weak dollar, the China reopening, that's kind of been removed, right? So unemployment rate is very important, right? If it still stays low, right, then I think market continues to go higher. If we do have an uptick in unemployment, then that could be that signal for a pullback. Hard to predict. I don't know where the inflection point is, but that's the next data point that I would watch is next Friday. TJ, if no deal, how far will it go? You're gonna have probably, I would say, some kind of it's a black swan event, right? So in terms of probability, if they don't reach an agreement, it'll probably be more than one standard deviation. It'll be at least two standard deviation moves. So I think very quickly we'll revisit March lows and December lows very quickly. But this is one in a lifetime signal, right? Event. So we could drop to October lows. We could drop to October lows too. You're going to have a very quick sell-off because everybody assumes that they will reach an agreement, right? So when you have a black swan event and they don't reach an agreement, you will see a pretty sharp pullback. I would say at least two standard deviation move. Thank you, TJ. Any other questions? All right, there's no other questions. You guys are great. Thank you very much. Enjoy your long weekend. Spend some time with friends and family, and I will see you guys next week. Thank you very much. Or closing bell. We do have a closing bell today also. Thank you. Trader, thank you. Scott, Randall, Patrick, Michael, Don, Claude, and Ray, and everybody else. Thank you very much and have a great day.